in the big scheme, the yen and the dollar. Will that remain?
I'm afraid yes. We have actually to consider what is the international funding position. And when you go into BIS statistics and look for non-US banks funding position, you find 10.5 trillion US dollar funding position. If you look at non-European banks funded in euros, then that is just half of that. So that means for every unit we are running into a deleveraging process, you would have to buy twice as many dollars as when compared to euros. That is one point. The other thing is concerning the Japanese yen. It is not only that the yen had been in the past used as a funding currency, but we have as well to watch very clearly what Japanese lifers are doing. You know that they have to pay their clients a 2% return over the years. And when you have steep yield curves in the United States, for example, above 200 basis points, and they simply step out, buy the bond market in the States, but do the currency hedge, and they might even impose a currency hedge for the existing portfolio. So the result is that you see the yen strengthening. Now this actually is as well a very important point when it comes to the policy response to the current crisis. What we desperately need is a stabilization in the emerging market environment, and I guess we can only do that by providing sufficient currency swap facilities for emerging markets. In the absence of doing so, if you would just react to this in a normal way, in cutting interest rates, then you would create steeper curves. And the steepness of the curve would actually provoke the lifer in Japan to be even more aggressive in buying Japanese yen. That undermines the funding position of emerging markets even more. So you would get into a vicious circle which nobody likes to be in.
Are we in an emerging market currency crisis already, Hans-Guenter, or are we approaching that situation?
Well, it is a question of definition, but actually what I'm experiencing here in the past week is no different of what I did experience in 97, 98. It is only that we are going to have a shift of the epicenter. It used to be Asia, then it became Eastern and Central Europe, and I'm afraid that we have as well to look at how much of funds went into emerging markets. So that means the gross flow is important. It's not so much the net position, if there's a net asset position or a net liability position. What is currently taking place is deleverage, and the amount of deleverage is a function of the previous flows into emerging markets, and they had been on record levels for 5 years before. So therefore, the magnitude of this current carnage in the market should not really surprise anybody.
Let's focus closer to home, Hans-Guenter. We've got the UK GDP report in just over 1 hour's time. Sterling today falling below 160 for the first time in 5 years. I mean, its fall has been precipitous in recent months. I mean, how low and how fast can it go?
Well, I still remember in July, I guess it must have been the 15th of July, I was making in this program the prediction that cable should fall to 166, and I got harshly criticized by other commentators after that. But what we are currently seeing is a more substantial decline in sterling against the US dollar, and I guess nobody should surprise to see it very soon trade in the 140s handle. It has a lot to do with the underlying conditions in the British economy. It has as well a lot to do how Europe in a whole is currently developing. And this outlook is not very pleasant. When Central and Eastern Europe is falling apart, European or the Euroland is going to lose about 23% of its exports, and that is significant. So it means we have at the moment the choice between recession or depression. The question is, how are we going to respond here from the IMF, from the central banks, and from politicians?
Okay. Hans, got to leave it there, but thanks very much for joining us there. Hans-Guenter Redeker there, the global head of FX strategy at BNP Paribas. Right, the time around 8:30 here in London. Here are today's headlines. The global sell-off resumes. European shares slump to a 5-year low. Asian equities slide to their lowest since 2003. And US stock index futures drop as well. Concern mounting about worldwide recession and its effect on corporate profits. Air France, Peugeot and Volvo tumble after downgrading their stock. In Asia, Samsung, Sony and Toyota drop after their results disappoint. And as emerging market bond yields rise, carry trades unwind, and the yen surges to its highest in 13 years. The pound falls to a 5-year low on the day Britain will probably reveal its economy shrank last quarter.